Hello, in this lecture we will define components of accounting system. According to Fundamental Accounting Principles, WILD 22nd edition, the definition of components of accounting system are: 5 basic components of accounting systems are source documents, input devices, information processors, information storage, and output. When we think about the accounting system, what we're talking about is that conversion of that source information, those accounting transactions, into an end result, compiling that information, generally being the format of reports, usually financial statements. So if we look at a flowchart of this, we see that the components of the accounting information system include the source document, the input devices, the information processor, the information storage, and the output. That would be the process that we would be going through for that conversion of the transaction information to an output end result. Let's take a look at a quick example. If we have the source document, we could have the sales price being the source document. We could have some input devices. Those could vary. We could have scanners on the input devices. We could be manually putting something in. We could be putting something in with a keyboard or a mouse. Those are types of input devices into the system. This is going to be a credit card machine here. So here's the credit card and we're running the credit card machine. Another type of input device that's going to record this information into the system. Once it has been recorded, then we're going to have that information processed in some way. That will usually be done within computers. Also, it could be done using some type of knowledge in terms of accounting knowledge as well. That's where the accounting knowledge, in order to take that data and put it into relevant form, becomes relevant. And then we're going to have that information stored. Again, it's usually going to be stored on a computer these days, but it could be stored in the cloud, obviously, now. Or it could be stored on a network that is not on the cloud, or not on the cloud. There's pros and cons to each. And obviously, it could still be stored by paper in some formats as well, but most of it at this point is going to be in some type of database format. Then we have the output. The output often being obviously a computer screen is a form of the output to display, as well as reports. A printer is going to be a form of output. So this is going to be the type of process that we go through in order to get that source document, those transactions, through the process, input into the system, put into a relevant form, stored, and then output.